how do you eliminate carbon dioxide emissions? That is a question that now for the past 15 years of my career I have been focused on. Originally, this was in academia, and now it is as CEO and co-founder of Gaiascope. It's an incredibly challenging question, but at the end of the day, I've come to one key conclusion I want to share today, which is you accelerate our transition to a carbon-free energy system by making the assets that are right for the world the most profitable option out there. It's that simple. I can say the solution in one sentence. Now, getting to that solution is a lot harder, and I want to focus today on a piece of that solution, which is the electric grid. So right now, the electric grid accounts for 1/3 of our global carbon dioxide emissions. It's a big number, but it's actually an even bigger part of the solution. So if we look at what the electric grid is made of, right now over half of that energy produced by the grid is from fossil fuel resources. So when we talk about decarbonization, what that looks like is, yes, growing all of our carbon-free resources to replace those fossil fuels. But it's an even bigger part of the solution because the future energy system is going to include electrification of transportation, of heating, of manufacturing, of growing demand for things like AI. And all of that electricity needs to come from carbon-free resources. So if you look at this graph and you look at kind of how that green sector has to go both down to replace fossil fuels and up to replace growing demand, it's a big challenge. This is a huge issue. But anytime you see challenge, you also see massive opportunity. Now, to achieve this, it's estimated that we need to be investing at a rate of $2 trillion annually by 2050. If you want to reach carbon zero sooner, you have to accelerate that rate. And right now, we're not there yet. We're at about half of that. So we're at about just over 1 trillion of carbon dioxide invested each year. And part of the challenge as to why we're not hitting that rate, that a number of other speakers have hit upon, but it's just that renewables are not yet that profitable. Right now, their IRR is on the order of 3–4%. And if you want private equity money flowing into this space, you really want to catalyze that investment. You want to be able to see returns that are closer to the teens. Bridging that gap is really challenging. Now, a piece of it is that every 5% increase in electricity price you're able to realize for assets yields a 1% increase in IRR. But that also has a flip side. When your IRR is so low, that means you're also incredibly sensitive to downside risk. So if your electricity price drops 5%, your IRR just dropped 1%. And this is a problem we are seeing today in the electricity space. We're actually trending a bit in the wrong direction. You have projects that budgeted and planned that they were going to be able to capture on the order of $25 a megawatt hour for every megawatt hour that they produced. They tie into the grid, they're up running, they're producing a few years, and because of congestion and other market dynamics, they're actually capturing things closer to $15 a megawatt hour. This is a massive problem. It means these assets that were planned and originally were going to be financially viable are now underwater. At Gaiascope, this is exactly what we want to help fix. We want to help bridge this gap. We've done that by building out a software platform, our Terra platform, that is basically forecasting what we think future prices of electricity are going to look like. We leverage that internally to trade, and we also leverage that by working with assets to help provide them with a floor and a guarantee of a price for electricity. So we can work with them and say, hey, maybe not quite the $25 that you wanted originally, but by working together, we can come in and say we can guarantee you at least a $19, $20 per megawatt hour price of electricity. And we can help sort of give them that downside protection by leveraging our software to do so. And this isn't just ideas, it's not hypothetical. We've actually been trading around these algorithms and utilizing this information for the past several years now. We have a small fund that we run on the side. What we do is just a proof of concept of all the ideas that we're pulling together. And this is showing you our cumulative returns since 2022 when we launched our fund. Now, in millions of dollars, it's on the order of 8. But when you look at that being on a base right now of starting in 2022 of about 4 or 5 million, growing to 15 million over this time period, you're looking at 50 to 60% annual year-over-year returns from what we do. That can have huge impact. Now, we're not the only solution, though, to get from renewables being a few IRR% up towards where private equity can come in and really accelerate our global transition, but we're a piece of the puzzle. It's going to take substantially more than us. We help provide that floor. We can help provide some sort of downside risk protection. But to bridge that gap, I really want to challenge you guys today of it's not just technology. It's not just policy. It's innovation of how we actually finance and build these plants. It's innovation of the business models that think through how can I capture extra value that I might not realize is on the table. It's by willing to take more risk than you might not normally if you were a utility player. And that's what I hope you guys take away from this today. You all sitting in this room are business experts, are incredibly knowledgeable in this space, and I hope you realize that you are a massive piece of innovation needed to solve this problem. Thank you.